Equities are down, but one of the things that may not be down so much is the cost of money for banks. And we're going to talk about that today with our good friend, Professor Mark Guthner of Rutgers. Hello, everybody, and welcome. I'm Mike Coe. Welcome to Office Hours with Professor Mark Guthner of Rutgers. How are you, Mark?
I am terrific. It's another great day out here in the great state of New Jersey. We got a very big governor's election going on here, so people are a little on edge, I think. Very anxious about what's going. It's been a long time since the state of New Jersey had a Republican governor.
Is that a possibility?
I have no idea. I'm not kind of a political wonk, but
That would be a change of pace, though. I can gather that much.
yeah, I
It's a
think it was
typically blue
Christy
state.
Todd
Yeah.
Whitman, I think was the last one. I don't quite remember, but that was a long, long time ago. I think the demographic here is something like 65 or 70% of the state is registered a Democrat. So
Isn't
Republicans
the
have a very hard
mayoral
time.
election in New York? Isn't the mayoral election in New York?
Yep,
I mean, I think nationally that's the thing that most people are
they're getting
paying
their
fairly
eyes on.
close
Yeah,
attention to, because we have a socialist who's
yeah.
in the lead. Granted, he doesn't face really significant competition because Mayor Adams did not drop out, right? Is that correct? Is he still in the
No, I think
running
he
somehow?
dropped out.
Okay, and so we have Andrew Cuomo, former Governor Cuomo,
Yeah, Sliwa.
and Sliwa, who is the founder of the Guardian
Yeah,
Angels, right?
and
Um,
so it's actually, to my view, it's like there are three Democrats running against each other.
well, I don't know that Mamdani. I don't know that I would consider him a Democrat because some of the things that he's proposed, which I find really extraordinary, and we don't need to pull up a clip, and I didn't mean to dedicate too much of this conversation to him, but I have listened. He's a well-spoken guy. Probably has a lot to do with his political success so far. I think he has a message that resonates with people who somehow feel like they're supposed to get more, because it's easy enough to find a disenfranchised group that if you say, look, the government's going to give you free stuff, that they'll hold their hand up and say, yes, please. Because if they don't have any stuff and people are offering to give them somebody else's, that probably sounds fairly attractive. What's more curious, though, is New York City is it's typically run by Democrats. That's true for a lot of big cities. Nothing unusual in that. It's an educated city, sort of a cultural and financial hub of the world. It's not uncommon for that demographic to skew left a little bit. But he has proposed some overtly socialist things. For example, he has proposed government, city-owned and operated grocery stores. Now, this is, number one, something that has been tried elsewhere. He has specifically said that they would not have to pay any rent and they would not have to pay any taxes and that they would pass those savings on to consumers. What is interesting, of course, is that existing grocery stores do have to pay those things. So if he really thought that taxes, for example, were driving up the cost of groceries, wouldn't it be easier to take the existing operators and say, we're not going to make you pay tax, we're going to bring your costs down, if he's saying that that's part of the cost? This is something that has been promoted and tried not only at scale in socialist and communist countries like the Soviet Union, but it's been tried even in the United States, and it has never turned out well. Not once. There's not a single success, and I just find this kind of thing very interesting, that the same bad ideas get tried again and again. They fail, typically very badly, and yet they keep coming up. What do you think is the cause of that?
Oh, I think there's always a hope, and there's always people that want something for nothing, and they think they're going to get something for nothing. And just remember, we went through 3 or 4 years where if you entered the country illegally, you got free housing, free food, free health care, free education for your kids. And it's like, well, what about me? So,
Mm.
so why not? Why not try it again? And it's always, listen, a lot of this has to do with age as well, because it's the young people in New York that are really suffering. They have to pay, and so they don't have, much of a life outside of, working and whatnot. So you can see that they would want some relief. And, I talk about this with my kids all the time when I teach my investment management classes. You start out life money poor and time rich. And as you get older and older, like me, that I become a little bit more money rich and a lot more time poor, right? So, it's that time is money thing. I tell them, they're all millionaires. They just have a liquidity problem because they can't borrow against all this income that they're going to generate over, the next 40 years of their life. I can see how people are frustrated. I remember when I came out of college, and it was tough. I think it wasn't as bad because I wasn't trying to live in New York. I was living in Southern California, where things were expensive. But real estate,
Not as
yeah,
expensive.
real estate, um, in its relation to wages, is way off the charts. It's one of the charts I think we showed 2 or 3 shows ago, where the
Hmm.
price of real estate has gone up much more than wages, and of course that makes that sort of untenable, and that's where people are at. That's your biggest one of your biggest expenses. Um, Healthcare expenses are the other big one that big take a big chunk of your paycheck. So after you get those two done, there's for a lot of people there's not much money left over. And so yeah, people will say, well, it's easy to point at somebody else that it's somebody else's fault, and I like to point to the Federal Reserve as the biggest fault because people speculate, they blow up like banks, and then the Fed bails them out. We get a big blast of inflation. The price of everything goes up, and people that who live off wages get left behind. It's the reason for the wealth disparity in the country, and the reason for this thing they like to call the K-shaped economy, where some people are doing great and a lot of people not so much.
Yeah, actually, to that end, for those who don't know, why don't you just explain what? Because that term gets thrown around a lot these days. I'm assuming everybody who's watching is probably familiar with it. No shame in not being. But for those that might not be, could you just share what the K-shaped economy refers to,
Sure. So if
if
you
it's
are a person that has assets, so you've got some stocks, maybe you own a house, maybe you even have some rental property, but you have assets and risk assets, and so stocks and real estate. Your economy looks pretty good because the price of those assets have been going up. What is the stock market up the last year? 35% or something. So you're feeling pretty good. Your wealth is doing well. Your income is doing nicely. You're getting dividends on your stock, etc. And so you feel like you're on the upward trajectory. But if you are a young person that doesn't have assets, or somebody for whatever reason doesn't really have assets, they don't own a house, they rent, they don't have any savings, and so they don't have stocks and 401k plans and things like that. You feel like you're on a downward trajectory and life is getting worse. And so the disparity between those two keeps getting, bigger and bigger. At least that's the way I think about it.
hmm And I think there is a lot of validity to that criticism. I think one of the things I often have felt and said is that you want to encourage good behavior. You want an economy that encourages good behavior and rewards it.
Yeah.
If you, if you want to see an economy, participants in an economy do the things you want them to do, you want them to be rewarded for the things that benefit
Yep.
the economy the most. And if wage earners suffer, but asset owners benefit, it's one of the reasons you would see a groundswell in populism.
Yeah.
That's typically what happens, is that when people who labor feel like they don't get to see any rewards or fruits of it, and people who do not work but own do benefit, that tends to breed considerable resentment.
Yeah.
And that resentment manifests itself in, basically the rise of people like Zohran Mamdani.
Yeah. So
who's very likely the next mayor of New York.
Yeah. So in your state, the state of California, there's a lot of talk about a billionaire's tax, or a wealth tax. Now, I'm sure if they pass it, it'll start the same way as the income tax. It'll start with 1% of the population, and then give it a decade, and it'll be they'll be dipping into everybody's bank account to take assets. And they're what are they? Because your state is always finds ways to spend money, and
It came out today that so the state government's not being completely forthcoming, but there was considerable investments made with CalPERS money. So this is employee retirement system
money. Yeah.
money. So we're talking about policemen and firefighters and teachers, and they made some considerable investments into some speculative green energy deals, and perhaps predictably, it's hard enough to venture capital is not an easy game under the best of circumstances. Those that specialize in it, they have plenty of strikeouts.
Yeah.
Right. Of course, if you start introducing government actors into this who might have incentives other than what's in the best economic interest of the people whose money it is, it's unlikely that their performance would be better. It's probably going to be worse.
Mm-hmm.
And so if they're motivated by, other motivations like, green energy, they might not necessarily be looking at something completely on its own economic merits. And apparently those investments have done somewhat poorly. And on inquiry, they're not revealing what those investments were.
Yeah, well, that's bad.
So,
They're probably in violation of the ERISA laws, and somebody could go to jail. And so I'm sure they will try to create as much fog as they can.
Yeah, I mean, you used to run pension money, so you have some sensitivity to this. Well, let's talk a little bit about. We'll find out. I guess it's a big election day in a lot of places. Yep. We'll find out soon enough which way voters actually go at the polls. But it seems in some cases that the lead for some of these, we have Prop 50 on the ballot here in California, and obviously have the mayoral election in New York that are all being viewed across the country, because I think people think they have implications that extend beyond their locales. But we'll have a better sense of how that all turned out next week. But it seems like the lead for a couple of these kind of sea change things is pretty pronounced. So I'm not expecting a whole lot of surprises. You have here a chart, which I've actually got up on my screen, the liability and capital liabilities of deposits. You want to talk a little bit about what we're looking at here?
Yeah, this chart here is the let's call it the checking account for the federal government held at the Federal Reserve. One of the things that's going on is the cash balance in their checking account is going up quite rapidly. This is an unintended or maybe intended consequence of shutting down the government. There's a lot of people that are not getting paid. The government is doesn't have the authority to write those checks to certain employees and beneficiaries of various programs. By the way, I read an article today that said that I forget the number now, is either one third or one quarter of everybody in Los Angeles County is on food stamps. And I about fell off my chair when I read that.
It can't be a third, can it?
So I couldn't. But anyway, there's lots of people. There's 42 million people in the United States that are on food assistance, which is, okay, take that, divide it by whatever we have in the country, 325 million, 350 million people. Throughout the country, it's really quite high. But I guess in maybe some major cities, it's even higher. But nonetheless, this money is not going.
I'm seeing something that says 15%.
Okay.
So I do know, for example, that in California, roughly 14%, it's just under 14% of the total population of this state receive SNAP benefits. So SNAP is the Supplemental Nutritional Assistance Program benefits. And that percentage is indeed, so it's not just that the absolute number of people in California, because it is the most populous state, is higher than other states. The percentage is higher as well.
So my guess is in the big cities that number is higher.
Yeah, so Los Angeles County, as of 2022, which is probably very stale, it was 1.5 million people were on SNAP benefits. According to NBC, this was NBC Los Angeles yesterday, they were saying that 15% of households relied on SNAP benefits in 2023. And Imperial County had the highest percentage. And yeah, so there are definitely portions of the state where it appears to be north of 20. So in Los Angeles County, it looks like it's more kind of Inland Empire type of stuff, which you would probably expect. Mark and I have both lived in Los Angeles, so we're a little bit more familiar. For those who are not, the benefits are lower in places like Santa Monica, Malibu, the beach towns, as you would expect.
Okay, I did a quick Grok. Grok said it's 15% in LA County. So maybe what I read
so that's LA County overall, but
was not very good. I didn't go
San Bernardino County is almost 17%.
Yeah. So
that's almost, if you can imagine, you're talking about more than 1 in 6, so, 1 in 5.5 people.
Yeah.
It's a lot.
So the question is why, we know why this is happening, because the government doesn't have the authority to make certain payments. And so the tax collection is still going on, so money is piling up in the checking account. And I only took note of this because I guess over the weekend, the Fed did a big repo and injected money into the banking system. And I'm going like, well, what for? There's no stress in the financial system right now. If we go to the next chart, this little chart here is showing SOFR. So SOFR is the secured overnight lending rate that banks lend money to each other, and the IOBR that's the rate that banks get when they deposit money from the Fed. So one of the things that's happening is, with money piling up at the Fed in the government's checking account, that money is not going into the banking system. So the banking system is having a little tightness in liquidity, and so they're scrambling amongst each other, trying to make sure they meet their reserve requirements at the Fed. And so you're seeing this rate go up, and that's why the Fed went in and injected some liquidity in the banking system. It was like a big number, like 25 or 30 billion dollars over the weekend. And so I just wanted to take a look a little bit more of that now.
So to paraphrase what you're saying, if I may, for anybody who's sort of watching this, It's interesting. I hadn't given this any thought as a part of the shutdown, but I suppose it makes some sense. So, to your point, in the private economy, people, and actually at the state economy levels as well, people continue to go about their business. They're doing the regular stuff. Money is getting yanked out of their paychecks, and as it normally would.
Yep.
But what is not normal about the disposition of those funds is that under normal circumstances, that money and a bit more, because the federal government operates at a considerable federal budget deficit, would actually essentially end up recirculating, and that's not taking place.
Yeah. And that's normally money
And-
that would get deposited into banks, and they could have some of that deposit sitting as a reserve over at the Fed, and with the money not being there, they have to scramble.
And so that was the purpose of the repo.
Yeah. And that's so I thought that was an interesting thing, and I'm a little surprised that maybe that's, well, not necessarily surprised, but maybe this is why we're having some weakness in risk assets right now. Stocks are down a bit. Bitcoin's been taken to the woodshed, and it's getting slammed hard. And since it's sort of a currency of sorts, maybe that's why it's taking the blunt a little bit harder than stocks. I don't know, but it's something that grabbed my attention and something I'm going to watch.
I mean, this thing is, yeah, this is really, so we're at a kind of a very interesting, I'm going to pull this chart in just for a moment, because this is psychologically, I think, a very important level that we're toying with now for Bitcoin. Now, I know that you are, generally speaking, I'm going to just put this in here, but I'm going to put it right here.
Yeah.
That's 100,000. Bitcoin, I think Bitcoin being 100,000, being a six-figure number, I think it's psychologically,
Yeah.
Is it important in a real sense? Maybe not. But in a psychological sense, it certainly can be for participants in the market. And we're toying with $100,000.
Yeah, we are, and I think it's vulnerable. I think down to as low as 80. For the Bitcoin bulls, I hope it doesn't go down there. That we find some support that's been there, but we've had one heck of a rally for the past few years, and
The red line, by the way, is basically where we started the year.
so we're still
Bitcoin is
okay. That's a good.
yeah.
good
Bitcoin
point.
has been on my list for the last couple of years, as folks will know, of ideas, and it was again this year.
Mhm.
So I didn't say Bitcoin explicitly. I actually, because you have to come up with an acronym, I used IBIT,
Right.
which is the ETF that tracks Bitcoin. But that's only up about, it's only up about 9-10% now. I think
For the year.
from from the day I mentioned it.
So if we kind of
But yeah, we're really toying with an
so if we can
interesting area.
compare that to what happened to December to March, we got a little bit more. If we have something sort of an equal beat down, we probably have a little bit more downside to go.
Yeah, so 80,000. That was this level here.
Mm-hmm.
Again, we're talking round numbers. It's not exact,
Yeah.
of course, but yeah, this is about 80,000 right there.
Mhm.
That white line I just drew, and we can see that tariff tantrum era.
Yeah.
That's kind of what we were looking at. But what is also interesting to me about Bitcoin, and I was wondering what your thoughts are on this, was just its relative performance to gold, because it really, there was a divergence. Both of these things were rising sort of together.
Yeah.
Equities were going up, gold was going up, actually all the precious metal complex was going up, and Bitcoin was going up. But this, took sort of a decided downturn before gold did.
Yeah.
I'm going to put that on the same
And
chart here. Yep. Hopefully this shows up on a separate index. Yeah, there we go.
That's the dark blue. That.
Yeah, I'm going to do this a little bit more recent, so we'll just go with 6 months. And so gold peaked much later. See?
Oh yeah.
That's right here. And, of course, it was at that point that Peter Schiff started really crowing. I mean, he's a long time, to his credit, right? So love him or hate him, this is a guy who he's weathered a lot of criticism over the years, often even from people that I know who said that, he was a kook and kind of he was a gold bug fanatic and this and that. But in truth, I think he's been proven correct. And it's not just that the price of gold rose. I believe its appreciation occurred largely for the reasons he said that it would.
Yeah.
And that, I think, is the most important thing. It's easy enough, you could say, well, something can go higher or it can go lower, and you can be right on the price but wrong about the reason. And in Peter Schiff's case, again, love him or hate him, he was right about both.
Yep.
So I think that's an important thing I would share about that. Well, let's get back to some of the other charts you have here and their implications.
All right.
I think this is very interesting because I'll be honest, I hadn't given much thought to this. Just like when I mentioned on Open Mic yesterday that I hadn't given a lot of thought to how much data center construction was going on overseas. It was only when somebody asked the question that I thought, how is it that I don't know right off the top of my head what percentage of the U.S.-based hyperscalers' data center construction plans are onshore or off?
Mm-hmm.
It seems like the kind of thing that when you're thinking about, oh, okay, Meta's going to spend $100 billion, Amazon's going to spend $110 billion, Microsoft's, you're paying attention to all these numbers, but we hadn't been paying maybe as much time and attention to where that construction was taking place. Maybe some people did when Caterpillar announced earnings last week, because I don't know if you saw this. This was kind of reminiscent of the .com era. But Cat got a bid, and it got a bid because they said that they were seeing increased construction activity, and they were referring to data centers. So somehow Caterpillar became an AI trade, and the stock popped as a result.
Right.
Like, oh, we're going to sell more bulldozers because they got to put up all of these data centers. And then Satya Nadella, who was in a forum, and he was on stage apparently with Sam Altman, and at the same time. But one of the points that he made, and actually our producer Jay, who others can't hear, but that I was able to hear, he pointed out that he had made the comment that they don't actually have sufficient electricity access, generative capacity, to power all of the GPUs that they already have. Not what they will have, what they do have, which I thought was interesting. And I think you actually have something. Oh, yeah. Well, this is kind of interesting. Let's get to this.
Yeah, well, Palantir's been one of those stocks that people have been talking about because it's gone from, single digits to like stratospheric levels, almost in a straight line. There's not a whole lot of corrections in that move from 2023.
That's a log chart, folks, by the way.
Yeah. And
so
you went, it peaked at what, about 220, something like that. And then it started that move at about $5. So that's a hell of a move. Now, people along the way have been saying the stock has been overvalued. They saying was rich at 200, at 20. It was overvalued at 40. It's way overvalued at 100 and 120, and then it gets up to 200, and it just laughed in the face of the bears. And as people tried to, I'm sure some people tried to short it along the way. I was thinking about writing about shorts on it over at the Options Edge, and I just said that thing looks like a train, and I'm not gonna get in front of that.
Don't do it. Don't do it.
As George Bush
Put buying,
used to
maybe
say,
selling call spreads. Yeah, that is. So to put things in perspective, folks, even at its price now, it's off $15 today.
Yeah. It's
trading at 110 times revenue.
Yeah, that's the next chart I have there for you.
Oh, let's have a look at that one. That's
So it's a.
How about that?
So that's way up there, and that's just crazy. I mean, that's not price to earnings, that's price to revenue. And who are their customers? Their customers are really good, primarily the U.S. government, but their governments, and Are they going to start selling their software product to corporations and stuff? How could they possibly grow into this valuation? And the only reason I brought it up today is since there was finally a crack in the stock, even when people thought the company beat expectations in their earnings yesterday, that
Mm-hmm.
maybe if you were going to short the stock, this would have been the first time in that entire move where I'd have a serious temptation to buy some puts or something like that on the
Yeah. So
stock.
the short interest, excuse me, the short interest here is actually quite small. It's about 2.2% of the float.
Yeah.
That translates to about 5 million shares. So Alex Karp apparently was making the rounds, as you would expect the head of a company to do in and around the time that they give out their quarterly earnings release. Um, and I didn't personally hear the comments he made, but I did hear other people commenting about the things that he was saying. And one of the things he was apparently lambasting, because he was unhappy apparently to see the share price declining, was, and again, you're getting this, third hand at this point. But my understanding is, and I will when I have an opportunity go back and try to see some of the interviews he gave, but that there was, some criticism on his part that the company was, being unfairly targeted by shorts and so on. I want to make something fairly clear because we hear this from time to time. I think it's a convenient punching bag for CEOs when they don't like the price action in their securities to say that it's these evil, nasty short sellers. Two things about that. First of all, not all short selling is necessarily a direct bearish bet on the stock necessarily. As a as a former options market maker, I can tell you that there were certainly circumstances when I was short stocks, and I didn't necessarily have any view in particular about them. I was shorting stocks because people were buying puts, and I needed to hedge. You will find that there are people who, and this may not be the case for Palantir, but you will often see that people may have positions in related securities. And if you do, and in the case of Palantir, it's not like this big bondholders because the company doesn't really have any debt.
Yeah.
But there are situations when people are long debt or, debt instruments, and that you short the stock as a hedge.
Yeah.
It's not because you think the company's going out of business, or it's not because you have it in for them. It's simply because you have exposure and you're hedging. So, and like I said, the short interest here is not huge. But I want to say something else too, which is that it's, someone taking a bearish position. I give these people tremendous credit. I have never been. I'm the kind of person who, for most of my professional life, has made comments like, "Oh, I think that company's overvalued." But I've almost never, ever done anything about it, other than just not touch it.
Yeah.
Because shorting stocks is a really dangerous game. And it's very difficult to do it. That's why I give people like Jim Chanos all the credit in the world. This guy made a whole career shorting stocks. And the thing about a stock is it can go to zero, but it can also effectively go to infinity. Look at NVIDIA.
Yeah.
If you had bought that stock and it went to zero, you'd have lost all that money. But this is a stock that's up more than 80,000%. 80,000%. I mean,
Yeah.
you can't, if you get on the wrong side of a short trade, it can be really painful. And if there's a short squeeze, this is something I think that Bill Ackman learned when he went very public with his massive short on Herbalife, and Carl Icahn said, thank you for revealing all of your cards to me. I think I'll take the other side of that trade. Thank you very much.
Yeah.
And, we saw this in the meme stocks. Some of that trading, by the way, has sort of crept back in. We're seeing a little bit. It's not quite the meme stock frenzy that we had in the Roaring Kitty days in 2020, early 2021, but we are seeing people target it. So I think a healthy stock market encourages people to bet against stocks that they think are unreasonably valued. And that could be too cheap, and that could be too expensive. And it's the gutsiest ones that are willing to make those latter bets, because when you get it wrong, it can be so punishing. So I don't hold it against short sellers. There's a big difference between being able to bet against a stock declining and being a participant in some of the bear raids that took place back in the days before Joe Kennedy became the first head of the SEC,
Yeah.
before the SEC was developed. That was manipulation, pure and simple. But betting against stocks is not inherently an evil thing to do. I think it's part of a healthy economy. And frankly, to illustrate this, I would say, imagine that you had somebody who said, okay, well, I'm going to short wheat. I think wheat prices are too high. So I'm going to bet against them. Would anybody think that that was an evil thing to do? Well, I mean, maybe there are people who think that wheat prices are too high and they wish bread was cheaper. They wish it took less bread to buy bread. Right? So, it's you're just betting on one direction versus another. There's not an inherent good side or a bad side in all of this. But Palantir's valuation is immensely difficult. I think they're doing very exciting stuff. I'm actually pleased to see governments availing themselves of services like those that Palantir provides, because what we sometimes worry about is that the government builds these huge caves full of old filing cabinets, and that there's somebody there with a slide rule and a green broomed thing slaving away trying to figure stuff out. We want to see government using better processes, and the involvement of companies like Palantir suggests that in some cases they are. That's a good thing, but that doesn't necessarily mean that the stock is a bargain at any price. It's not a bargain here. So right. I will just offer that. What else you got here for us? This is Kenvue. I think this is also interesting.
I just wanted to take a little note on Kenvue. It's a company I've watched because it's was spun off from Johnson & Johnson, and it's a bunch of consumer product type companies, or brands, I should say. One of which is Tylenol, and Tylenol's been in the news as potentially a problem for children for pregnant women. So maybe pregnant women shouldn't be taking Tylenol because there could be a link to autism. And now the research is inconclusive on this, but it's something that became top of mind, and the share price got knocked down. And so I was watching the stock. One of the things I had a hard time figuring out was there any legal liability there? If they did indeed prove that there is a link between the consumption of acetaminophen, Tylenol, to autism, then they would be subject to lawsuits and stuff. But then I saw that Kimberly Clark said, no, there's probably not a problem here. So they came and bought the stock at its lows. Now, when the company came public, about 18 months ago, it was spun out of J&J. I think the stock's down 35-40%, something like that. So, and all the brands they have are, names that you might recognize, like Neutrogena in the soap space. They also have ibuprofen in things like that. So, very steady performers. Company would, steadily make money. Not a grower though, because they're all mature brands, and so it fit in nice with Kimberly Clark's portfolio, because now they can essentially take Kenvue's products and push it through the same distribution channels they have, and maybe get some synergies in doing this. But if we go take a look at the next stock, we take a look at Kimberly Clark, and we see that upon that news, the Kimberly Clark share price cratered. And so this is the market's view that they're overpaying for the company. Tells me a couple of things. Maybe J&J was really smart and savvy about selling off or spinning off this business a long time ago, or 18 months ago, as businesses that did make sense for them. Now the
So this is interesting. Just so everybody is aware, when the deal was announced, the deal terms were that Kimberly-Clark was going to acquire Kenvue for approximately $48 billion. At the time of the announcement, to be precise, it was $47,918,040,000. Seems like an arbitrary thing. Why was that? It is because it is a combination of cash and stock.
Yep.
So a Kimberly-Clark shareholder, I'm just going to do a little spreadsheet for us so we can all, Kimberly-Clark shareholder, a K-View shareholder will get 0.1463 shares of Kimberly-Clark plus $3.50 a share.
yeah.
All right, so we can quickly take a look, and so this will be a real-time look. So we're going to say, okay, well, here's the price of Kimberly-Clark, and we're just going to look at the last price as an indication of how this deal is priced in K-View share terms right now. So what do you get? That is the price of, that is not the price of Kimberly-Clark. What did I do here? I have some kind of an error. Oh, there we are. All right, I'm going to blow this up because you guys probably can't see this, but let's do this. All right, so this is kind of a common thing that we do when you have a deal announced is you say, okay, well, let's take a look at how the price of the shares are now and compare that. So that's the price of a K-View share. Compare that to the theoretical value of the deal, which is going to be the 0.1463 shares plus this. So that is going to be the deal price at the moment is that much in Kimberly-Clark stock plus that much in cash, which means that you have this much of a premium. Now, it's so funny because we were just talking about legitimate reasons why you would short a stock. So what would you do here? You would buy K-View at $16.15 a share, and you would sell however much you bought, right? So now the tricky bit is that because Kimberly-Clark is, a bigger share price, but let's just say for the sake of argument that you bought 100 shares of K-View, well, then you know that you are effectively going to get this 14, oops, that shouldn't be a dollar sign. You're getting 14.63 shares of Kimberly-Clark when the deal closes. So what you would do is you'd say, okay, well, maybe I don't do 100, but I want to be able to shorten an even number of shares, so I'll short 15 shares of Kimberly-Clark, and I'll buy 110 shares or so of K-View, right?
Yep.
And in so doing, in theory, assuming the deal closes, you will lock in a gain of 12.8%. Now, is that a good return or is it a bad return? Well, the deal is expected to close in December of 2026. So that means you have essentially a 12.8% return in about 13 months. And you could say to yourself, so that's 13%, let's round it, 13% in 13 months, 1% a month. Is that a good rate of return? Well, if you think that there's a high probability that the deal goes through, that's a very nice return because you have a very high probability of collecting it. So the chances that you get your 13% is high, and the chances that you lose money is relatively low. One thing I would add on this Tylenol thing is that, Tylenol, they've never explicitly promoted its use. The company never did amongst pregnant women. Yeah. And in fact, there was some controversy about this recently. You alluded to that, but I did see the, earlier comments and labels that had come out from Tylenol saying, we do not recommend the use of Tylenol or any of our products amongst pregnant women without the explicit recommendation from their physician.
Correct.
So it isn't, this is a situation that's quite unlike other types of product liability where they said, it's a great idea, you should take this and it's perfectly safe. The company was not saying that. they were basically saying you should not do this unless you are directed to do so by a doctor. Presumably that means that in case-specific instances, a physician who has your best interests at heart has established that, on balance, it is in your benefit to do this rather than not. So I would imagine if that's true, that their liability would, in theory, be somewhat limited.
Yeah. No, I think that's right.
But it is, to your point, and I think this is quite interesting, this is a common phenomena that you will see, that the acquiring stock's price will decline, even as the acquired, the target company's price will rise, as has happened here. And this is how you just do this basic math. You know, when you see these deals, go look at the deal sheet, see what it looks like. In this case, you get 0.1463 shares of Kimberly-Clark for every KVU share you hold, plus $3.50 in cash. So here's another interesting question. What should happen to the implied volatility of options on KVU? We like to talk about options. And this is interesting because what this means is that I've often said cash is not that volatile. What this means is that $3.50 of a KVU share is really just cash.
Yep.
Right? On top of whatever cash might happen to be sitting on their balance sheet. I don't think this company has any on balance. It's probably, usually when these things spin off, they don't spin them off with buckets of cash, and this one is no different. This one has $7.6 billion in net debt. So effectively, actually, that's a good question. Does that work out to, so it's $8.6 billion, I'm sorry, $7.6 billion of net debt on a $38.5 billion balance sheet. So look at that. So lo and behold, the cash amount being paid per share is just slightly in excess of the total debt amount. So in other words, and that should not be a surprise. So basically the cash component of the deal satisfies the outstanding debt on the target company. And then the rest of it is like for like on equity. So what should happen to the volatility of KVU options in light of this? What that tells me is that effectively you're taking on, let's take a look at Kimberly-Clark. Kimberly-Clark's pre-deal volatility. We'll bring a sheet in here. Let's take a look. So I'm going to compare KVU vol. So we can. This is how you're going to price the option. So we're going to look at 30-day volatility in KVU versus the 30-day volatility in Kimberly-Clark ahead of time. So KVU was slightly higher implied volatility than Kimberly-Clark was. Kimberly-Clark's net debt, I'm assuming it's a staples company. They typically carry debt. It does. It's actually got about the same amount of leverage.
Yeah, you've got historical volatility there, Mike.
I know.
Oh, okay.
That's what I'm trying to look first at the historical vol.
Okay.
So I wanted to see, how, because the way I'm thinking about it is the leverage of these two businesses is roughly comparable. Their balance sheets, they're about the same size business, and their capital structures were virtually identical.
Yeah.
So that's the first
when
thing.
I was
The second thing is, are the underpinning businesses experiencing slightly different volatility? In other words, is Kleenex a slightly more or less volatile business than pain relievers? Right?
Yeah.
So that was the exercise here. And then once having done that, now knowing that the capital structure of these two businesses should be approximately the same, what are we going to get? To me, these KVU options have come in quite a bit. They look rich. That's what I think.
Yeah.
Let's see. Oh, yeah. Oh yeah, I think people should be selling some puts in KView.
Yeah. So I did a paper on this when I was a MBA student at Michigan, and my thesis was is of implied volatility should go down on a takeover offer because it
Mm-hmm.
represents an implied put option. So it's
Mm-hmm.
like buying the stock plus a put, and so what you should have left over is something of lower volatility. And I did that, and I did this, but I didn't have the advantage of a Bloomberg. We went to the newspaper and pulled out option prices, and then I ran a computer program to calculate the implied volatility on my very original IBM PC, the one with the two great big drives on it that made so much noise you could hear it next door. And I we picked
It had drives, not it didn't have tapes.
no, it didn't have tapes. And then memory back in those days was a valuable commodity. So I would do a computation for a day, store the result, and get the next day and store the result. To do that for 90 days, the computer had to run overnight. It took about 8 hours. Just to give you an idea of what the speed of computers was back there then compared to the speed of computers today. That would have been essentially instantaneous today. Um,
Hmm.
and we indeed showed that when we picked four stocks for our little study and showed that on the day after the takeover offer that the implied volatility on the company's stocks would go down and go down. So we saw some of
I
that,
think.
but this didn't fall as much as I was going to guess it was going to fall.
Well, look at this. You can sell the Feb 16. So remember what I just said about the deal.
Hmm.
You can get a little less than 1% a month playing that the deal goes through if you tried to lock it in
Yeah.
by purchasing KView and shorting Kimberly Clark on the ratio I
Yep.
described. 0.1463
Hmm.
shares of Kimberly Clark for every long KView. But looking now, look at this. You can sell the Feb 16 puts for close to $2.
Yeah.
Those are 26 cents out of the money. So that's 12.5% in 108 days. 12.5% of the strike.
Yeah. That's an interesting
I
situation.
think that's I'd do that. I think that's a better trade. It's got a little bit more risk, but only a little.
Yeah.
But a much higher. You get essentially the same amount of money in less than a third the time.
Yeah. Yeah. That is
Gives you something to trade around.
that's an interesting situation. I'm surprised it's that high. That's an indication that I think somebody somewhere believes,
People think the deal's going to break. I
yeah,
think
that the
somebody.
regulators won't let the deal go through. And I don't know why. There's not. Yeah.
I will tell you this: I don't think that if people think that the regulators are going to get in the way of this,
I don't think so.
then why weren't they in the way of it back when Johnson and Johnson owned KView? They weren't forced to spin this thing
Yeah.
off. There's no reason why a competing company shouldn't be able to acquire it after the original company decided they didn't want it anymore.
Yeah. No.
So I don't know. I think this is kind of interesting. So let's just take one last quick look at KView here. We recognize that there is this press issue. So there's other, this is the reason the thing trades where it does. Full year estimated earnings $1. Next year's $1.10. Not extraordinary growth, kind of slow and steady as she goes, but 7.2% year-on-year anticipated adjusted EPS growth. If you were sell that put and you are put the stock, you collect $2 on that put. You're owning the stock at $14. What that means is that you're effectively taking the risk that you buy the stock at 12.7 times next year's adjusted earnings per share estimate.
Yeah.
And on a standstill basis, you get 12.5%. I think that's pretty attractive. It's funny because I was not looking at this, to be honest, because people who watch, like the open mic live streams, and they probably know that I have a tendency to focus more on not hyper growth companies, but everything I screen for, relatively high growth, top line growth, which is to say, my attitude has always been the S&P is a pretty good investment in the long run. For me to start picking stocks, I've got to see something that looks like it has a chance to outpace it, and not by a little.
Yeah.
And for that, I need growth, right? I can never shrink my way into faster growing portfolio. Like, oh, here's the old cigar butt strategy. I can pick this thing. It's not growing, it's shrinking, but it's cheap.
Yeah.
10 years from now, it ain't gonna matter.
It's not going to be there.
Right. So my attitude has always been look for things that have a decent chance to outpace the growth of the broad market. So this wouldn't show up on any screen I would look for.
Yeah.
But as a trade, because that's what options trades are, they expire by, and this one expires in about 3 months' time. The downside risk is you put the stock at 12.7 times next year's earnings. Do I think Tylenol and Advil sales? You said they own Advil too?
Yeah.
Right? Is that what you said?
They have an ibuprofen. Really? I think it's Advil.
Oh, they have a competing product. Yeah, I was going to say I thought they competed, but maybe not. So
I think I had because
Motrin.
Motrin, that's the one. Yeah.
Mm-hmm. So they kept the Band-Aid antiseptic, because I always think of that as J&J. So they've got Tylenol, Motrin, Neosporin, the Band-Aid antiseptic cleansing. These are probably the brands that we're most familiar with that they possess. I didn't know this. Neutrogena, Listerine, Zyrtec, Aveeno, Benadryl. Yeah, I mean, I get it. Look at this. So Kleenex, there is something about Kleenex having Zyrtec and Benadryl and Kleenex. They've got like the cold, flu, and allergy thing all locked up now, right?
Yeah.
So if your nose is running, Kimberly-Clark's.
That's your company.
You're going to be paying Kimberly-Clark.
Yeah.
And this is a little, I'm not, so they've got Nicorette smoking cessation products as well. So that's, thank you for this, because was off my radar. I think I'm going to sell a couple KVU puts.
Yeah, well, you gotta pay some bills.
Yeah.
I think this is a low risk trade.
Yeah, this is that's the other thing, is that we do have kind of lofty equity valuations, and I don't know that cracks are. This is seasonally a strong time.
Yeah.
I think to your point, you were talking about that wealth effect, the fact that people who have assets are feeling pretty good. They're probably going to spend handsomely going into the holiday season. It's a 70% consumer-driven economy. I did see statistics that indicated that the lower end demographic is probably going to be, they have planned to rein in their spending. So the lower end household consumer was shown a statistic was going to try to reduce their holiday spending budget by about $120, I think. So it's like 8-9% was one of the stats I saw. But the high end consumers, there was this also came out this week. Maybe we can come. I'll ask one of the producing staff here, Jay. Maybe you can find it. There was an interesting chart about the pass-through wealth effect to consumer spending, which was showing that every dollar of incremental wealth creation was accounting for an incremental nickel in spend or something like that. It was, which is a higher relationship of the wealth effect to consumer spending than has been exhibited in prior studies. Oops, sorry. So I thought that was kind of interesting as well, because to your point, in the K-shaped economic recovery, there's been a huge wealth effect. And at least that study is suggesting that that wealth effect's impact on consumer spending is greater now than it has been historically.
Yeah.
Which, I mean, from a GDP perspective, should be interesting. Bearing in mind that, this shutdown does have some economic effects as well. And if there are going to be, have we established whether these snap cuts are really going to happen? Because my understanding was that a court ordered the government to pay monies that were set aside or available for SNAP benefits. Did you see that?
I haven't seen any update on that. It was my understanding there were some conflicting court orders, and it was the position of White House lawyers was that they didn't have the authority to write the checks, and so and that's why they didn't. And so I think their response was, is if it's legal, they're happy to do it. So we'll see what happens. I'm sure it'll get worked out.
I would imagine from a political standpoint that if they have the ability to write the checks, there would be little political incentive not to.
Yeah.
Because if they were and they didn't, that creates a lot of grist for the mill.
Yeah.
Which is probably not such a good thing. One other thing I thought was interesting, and maybe we'll touch on this because we're coming up on the hour now, and maybe you can opine on this. So with my expectation that I think consumer spending will probably be fairly robust this holiday season, particularly amongst higher-end consumers, and the fact that Walmart is trading, by my work, at least 3 and maybe 4.5 or 5 turns more expensive than Amazon. Walmart is the largest grocer in the world, and as such, the largest grocer in the United States, also the biggest recipient of SNAP EBT monies.
Yep.
So there's 2 things that could happen. Nothing, in which case it's just expensive relative to Amazon, or something, in which case it's even more expensive relative to Amazon. Sell Walmart by Amazon. That's my thesis. What do you think?
Not bad. It's makes some sense. I wouldn't disagree with that.
Okay. Well, maybe on that note, having provided, perhaps a little unintentionally, we came up with a couple trade ideas that people could explore in greater depth on their own, because you can kind of see, I mean, the KView put selling idea was one that it emerged organically as a function of our conversation, which, again, I thank you for having brought that to our collective attention, because honestly, I wouldn't have been looking at KView. I was looking at KView with passing interest because the way I was looking at it, I was like, so, M&A is not completely dead here.
Yeah.
Right? We've got some stuff going on, and this is a great deal for bankers. Johnson & Johnson decides that they need to get rid of KView. The bankers get paid. Kimberly-Clark decides they need to own KView. The bankers get paid. Not bad to be a guy at Goldman Sachs, guy or a gal, Goldman Sachs, JP Morgan, and the like. So on that happy note, for those of you who are thinking of pursuing a career in investment banking, it looks like your future remains secure.
That's right.
And if you don't get the job, then you can become a happy consumer of Kimberly-Clark's Kleenex products.
There you go.
Take a little Tylenol and buy some Kleenex.
Yeah, that's right.
All right, folks. Well, Mark, this was great. As always, I enjoy our conversations, and I hope some people who watch this found it helpful. And you know what? Actually, what I didn't do, I apologize for this. Let's see. Okay. Oh, yeah, you mentioned Mamdani, a bad solution. I'm just going to take a quick peek here. Yeah. Okay. So it seems like the viewers that did leave us comments, that they seem to share our perspective on both.
Yeah.
The mayoral race in New York, whose results will soon be known. Even if the impact of the policy decisions that are made are only suspected at this point, it's going to take a little longer for that to play out. But I'm sure there'll be a lot more for us to talk about because we've still got a whole slate of earnings that are still coming down the pike on our next office hours, next Tuesday at the same time. And so for those of you who tuned in, we look forward to talking to you then.
Terrific. See you, Mike.